1 year of the home prices peaking in Southern California and really around the country, and everyone has been talking about how the home prices are going to crash and everything's going to fall through the floor just like 2008. Well, that's not really happening, and why? Why is that not really happening? In this video, we're going to cover the reasons why the home prices aren't crashing, why the interest rates getting hiked up, almost a year ago today, and why those aren't creating a entire market crash as far as affordability goes, as far as the homes that are available on the market, and why people aren't necessarily putting their homes up for sale to then create an inventory that allows the home prices to quote unquote correct or crash. What's up? My name is Alex Villari, and I'm here to deliver actionable real estate content that will help you make an educated decision on whether you're buying, selling, relocating, or investing. It doesn't matter. I'm here to help you. So drop a comment down below if you have any questions or any videos you'd like me to create. But nevertheless, let's get into this video about why the home prices aren't crashing. Now, if we look at the data and we look at the past, about April, May, June, I guess it was really last summer's when everything kind of peaked. And, we had the buyer frenzy that was going crazy with the rates that were well below the fours. Now, with rates in the 6.5%, 7%, and sometimes some days creeping down to the lower sixes, what we're seeing is people have equity in their homes, and they're not necessarily going to jump from a 4% rate up to a 6% rate, or maybe even higher depending on where they're going. Now, people are still relocating across the country, places like Austin, Arizona, the California exodus, quote unquote, is still a thing. However, I'm local to San Diego County, and we're seeing multiple offers and low inventory. So here's my thought, and let me know down in the comments if you agree or disagree, or what your thoughts are. Now, what we're seeing currently in San Diego, for example, is a limited amount of homes for sale, or a limited amount of homes, period, for the amount of people that want to live here. What that means is a simple supply and demand solution. With less supply or less inventory, we're going to have higher prices. Now, I'm personally seeing multiple offers on multiple properties for my buyer clients and my seller clients. And essentially what we're looking at is the home prices are not going to crash. And I'm saying that because, yes, we did have a buyer frenzy, we don't now. The homeowners don't necessarily need to sell, and if they do need to sell, they have equity to play with. So with equity to play with, we're not going to see short sales, foreclosures, and all that nature. Yeah, we'll still get a few here and there, which we always do year round, no matter what the market is. When people can't just simply afford their mortgage anymore. But there is a fat stack of equity on the majority of homes that are coming up for sale. So these sellers have room to negotiate. The buyers that are out there are highly qualified and can definitely afford to buy a home right now, but they're also taking advantage of the opportunity. If we look at the data over the last, we'll call it 20 years or so, inventory has slowly ticked down as more and more people get into the market. We got the boomers, we got the millennials, the Gen Z. They are all buying homes right now. And so what that means is, as we go forward, we are short roughly, several million homes within the entire country, let alone each individual market. Like here in San Diego, for example, we are short thousands of homes for people that actually want to buy a home and can actually afford it right now. So what should you do in terms of getting yourself into a home or relocating, and with this fear in the back of your mind that home prices might crash? Well, hopefully with what I just told you, you realize that home prices are not going to crash given our current state of the market and where we're at. Why? Well, we already talked about it. It's simply because we don't have enough inventory on the market. Sellers aren't going to give up their, huge equity stake in their properties with the lower interest rates and then go to a higher interest rates with the possibility to have negative equity here in the near future. So what do you do as a buyer in terms of having negative equity in the near future? Well, just make sure you get a good deal. Make sure you can afford the monthly payment, because history repeats itself, which it always does. The home prices will go up in the future. They always do, they always will. Supply and demand says so. And if you just look at the history, do not be scared of the media. Look at the data. It's going to go up. Buy the home if you can afford the home. And simply just go from that mindset alone. That's my personal opinion. You do what you want. Drop a comment down below if you think differently. The bottom line is we don't have the buyer frenzy. We don't have sellers that have to sell in a hurry, or rather the vast majority of sellers don't have to sell right now. And if they do, they have equity to fall back on, so they're not short selling or foreclosing on their homes. So anyways, that's the video for today. If you got any value at all, like, comment, subscribe. If you would like to keep on the up on what's going on in the real estate market, whether you're a buyer, seller, or investor, I'm here to help you, give you actionable real estate content that you can use to make an educated decision. Drop a comment down below with your thoughts or videos you'd like in the future. All right, Alex Villari signing out.